You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 24th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day. Now, the first broadcast, that's our live training room. That is reserved for members only and those who are taking their 1 week free trial. If you have not taken your 1 week free trial, when Michael comes on a little bit later in the broadcast, he will walk you through step by step exactly how to do it. Now, when you take the 5-day free trial, you're not just getting access to the live training room. What's going to happen is we're going to treat you like you were a passport holder for 5 consecutive trading days, even if it stretches over a weekend. So you never have to worry about what day of the week or weekend or hour of the day that you sign up for the trial. You're going to get 5 consecutive trading days, and there is no credit card required. We want you to have a clear mind. We want you to focus on what's being taught so that at the end of your trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast at 12 noon Eastern. And this broadcast, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways you can join this afternoon broadcast live. I'm going to give you the best way first. You only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says afternoon broadcast. Click the link, fill out the 30-second registration form, and you're done. Now, it's going to log you into our platform the day that you fill out the form. But more important, going forward, every trading day, about an hour before this broadcast starts, you're going to get an email. And in that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there's going to be days when you're out of the office or away from the desktop, but you still want to join live. There will also be days when you're busy and can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel. And it's really easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so really all you have to remember is the CFRN. We're actually simulcasting right now. In other words, we're streaming live on our platform and we're streaming live on our YouTube channel. Modern technology, isn't it wonderful? Sometimes. Now, not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. Do the same thing. Now, obviously, the more recent broadcasts are going to be more relevant to you based on current market conditions and all that's going on in the world today. And there's certainly a lot going on, isn't there? youtube.com/CFRN. This is our daily schedule. I do my best to get us started every day at 12 noon Eastern. Then we go to our daily devotional, a word of prayer. Then I share some market news with you. Then we get into the charts and the alerts, the Logic 247 alerts, the concierge trade alerts. And then about 12:50, Michael joins us and gives us a quick recap of everything that happened this morning in the live training room. And then at the top of the hour, we go live on the TradingView platform and do some live trading for a half an hour. When we're done with that, if I haven't finished the recap of the alerts, I'll do that. And then I'll wrap everything up with our good word for the day. So let's get started. Now, the topic of the devotional that we're in this week, the Complete Bible Answer Book. Anyone who's ever read the Bible has obviously had questions. And we're striving in just 5 days to answer some of the most pertinent questions. Today's scripture is Titus chapter 2, verses 11 through 14. And I'm going to share with you from the Message translation. Starting in verse 11, God's readiness to forgive and forgive is now public. Salvation's available for everyone. We're being shown how to turn our backs on a godless, indulgent life and how to take on a God-filled, God-honoring life. This new life is starting right now and is whetting our appetites for the glorious day when our great God and Savior, Jesus Christ, appears. He offered himself as a sacrifice to free us from a dark, rebellious life into this good, pure life, making us a people he can be proud of, energetic in goodness. Again, that was Titus 2, verses 11 through 14. So, one of the questions that most people have, if they've ever picked up a Bible, does the Bible actually claim that Jesus is God? Many biblical texts can be used to demonstrate that indeed Jesus is God. 3, however, stand out above the rest. Not only are they clear and convincing, but their addresses are easy to remember as well. John 1, Colossians 1, and Hebrew 1. First is John 1. In the beginning was the Word, and the Word was with God, and the Word was God. Here we see that Jesus was not only in existence before the world began, but he is differentiated from the Father and explicitly called God, indicating that he shares the same nature as his Father. Next, Colossians 1 informs us that all things were created by Jesus. He is before all things, and God was pleased to have all his fullness dwell in him. Only deity has the prerogative of creation, pre-exists all things, and personifies the full essence and nature of God. And finally, in Hebrews 1, which overtly tells us that according to God the Father himself, Jesus is God. About the Son, the Father says, "Your throne, O God, will last forever and ever." Not only is the entirety of Hebrews 1 devoted to demonstrating the absolute deity of Jesus, but in verses 10 through 12, the inspired writer quoted a passage from Psalm 102, referring to Yahweh and directly applying it to Christ. In doing so, the scripture specifically declared Jesus ontologically equal with Israel's God. Many similar texts could be added to this list. For example, in Revelation 1, the Lord God says, "I am the Alpha and the Omega, who is and was and is to come, the Almighty." In the last chapter of Revelation, Jesus applied these same words, Alpha and Omega, to himself. Additionally, in 2 Peter 1, Jesus is referred to as our God and Savior, Jesus Christ. In these passages, and a host of others, the Bible explicitly claims that yes, Jesus is God. Join me in a word of prayer. Heavenly Father, we thank you for the grace that has appeared, bringing salvation to all people, as revealed in Titus 2. Teach us, Lord, to say no to ungodliness and worldly passions, and to live self-controlled, upright, and godly lives in this present age. As we await the blessed hope, the glorious appearing of our great God and Savior, Jesus Christ, help us to be a people eager to do what is good. We thank you, Lord, for redeeming us from all wickedness and purifying for yourself a people that are your very own. Empower us by your Holy Spirit to live out this calling each and every day. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Wednesday. Let me give you the numbers from around the world. We're going to start here in the U.S. cash markets, or the indices as they're called. Currently the Dow is down 287 points. The NASDAQ is down 496. That's 2.25%. The S&P 500 is down 91, which is over 1.5%. And the Russell 2000, our man in the street, is down 3 points. Now, if you've been tuning in each day over the past few weeks, none of this comes as a real surprise. As I wrote in the passport holder discussion group this morning in Telegram, the train is running on time. In the commodity basket, crude oil is up 72 cents today. We did have crude inventories this morning, trading 77.68 last. That's a gain of almost 1%. Gold is up $14.70, trading 24.22 last. Silver is up a nickel, trading 29.38 last. In the Asian markets at the close, Nikkei down 439 points, or over 1%. The Shanghai down 13. The Hang Seng down 158 points, almost 1%. And in the European markets at the close, FTSE down 13. The DAX down 170, which is almost 1%. And the CAC down 84, which is well over 1%. So we had a red day in Asia. It was a red day for the UK. And currently, it is a big red Radio Wednesday here in the US of A. Let's go to the news. The NASDAQ led stocks lower this morning after lackluster earnings from both Alphabet and Tesla stirred up worries that big tech's power to fuel gains is fading. Now, we've been warning about this for well over a year, that this incredible rally the market has been on has been riding on the back of just 7 stocks. The Magnificent Seven, they call them. We said it was a house of cards, and that house of cards is starting to fold. Stocks are sinking as investors digest mixed quarterly earnings from Google parent Alphabet and Tesla, the first of the Magnificent Seven megacaps to report. EV maker Tesla's stock price slid more than 12% in early morning trading, while Alphabet shares dropped about 4%. Now let's talk a little more about Tesla. Tesla stock fell more than 11% this morning after the company reported mixed second quarter results late Tuesday that revealed growth this year would be notably lower than what we saw in 2023. In the second quarter, Tesla reported revenue of $25 billion, more than the $24.63 billion expected, according to Bloomberg's estimates. Tesla reported revenue of $24.93 billion in the same quarter last year. Adjusted profits were shy of estimates, coming in at 52 cents per share against the 60 cents expected. The company did say in its report it remains on track for the production of new vehicles, likely including a cheaper EV in the first half of next year. Ahead of Tuesday's report, Tesla stock had erased its losses for the year, which stood at north of 40% at their lows in April. The stock is now down more than 12% this year. Let's jump to Canada. The Bank of Canada cut its benchmark interest rate today by 25 basis points for the second consecutive time, a widely expected move that brings its policy rate to 4.5%. The rate cut comes as inflation moderated to 2.7% in June, with price pressures broadly easing. At the same time, Canada's labor market has stalled, as job growth has struggled to keep pace with the country's surging population, and it takes longer for people to find work. Economic growth also remains sluggish, falling short of its potential output. With broad price pressures continuing to ease and inflation expected to move closer to 2%, the Governing Council decided to reduce the policy interest rate by a further 25 basis points in a statement released this morning by the Bank of Canada. Here's a little good news. U.S. mortgage rates eased last week to their lowest level since early February, while a further decline in home purchase applications suggested even cheaper borrowing costs may be needed to stir demand. The contract rate on a 30-year fixed mortgage slipped 5 basis points to 6.82% in the week ending July 19th, according to the Mortgage Bankers Association. An index of mortgage applications to buy a home decreased 4% to the lowest level since the end of May. While mortgage rates remain below 7%, they're still twice as high as they were at the end of 2021. Combined with elevated home prices, many potential home buyers have been shuffled to the sidelines, evidenced by waning sales of previously owned homes. The National Association of Realtors measure of home buyer affordability declined for a fourth straight month in May and stood at one of the lowest levels in the group's data going all the way back to 1989. Google, or Alphabet as it's known, reported its fiscal second quarter earnings after the bell yesterday, beating analyst estimates on the top and bottom lines as its cloud businesses continue to pick up steam, topping the $1 billion mark for operating profit for the first time. For the quarter, the company saw earnings per share of $1.89 on revenue of $84.7 billion. Analysts were anticipating earnings per share of $1.85 on revenue of $84.3 billion. That's a jump from the same period last year of 31% and 14%, respectively, when the company reported earnings per share of $1.44 on revenue of $74.6 billion. Advertising revenue topped $64.6 billion versus analyst expectations of $64.5 billion, and up from $58.1 billion last year. But here's the catch. YouTube ad revenue, however, fell short, with the segment bringing $8.66 billion versus expectations of $8.95 billion. Shares of Alphabet were down roughly 3% in pre-market trading this morning. Speaking of mortgages and homes, sales of new U.S. single-family homes fell to a 7-month low in June as higher mortgage rates and prices weighed on demand, further evidence that the housing market recovery faltered in the second quarter. New home sales slipped by 0.6% to a seasonally adjusted annual rate of 617,000 units last month, the lowest level since November. The sales pace for May was revised up to 621,000 units from a previously reported 619,000 units. Economists polled by Reuters had forecast new home sales, which account for more than 10% of U.S. home sales, rising to a rate of 640,000 units. New home sales are counted at the signing of a contract. They, however, can be volatile on a month-to-month basis. Sales slumped 7.4% on a year-on-year basis in June, though the average rate on the popular 30-year fixed-rate mortgage eased from a 6-month high of 7.22% in early May. It remained elevated through much of June. You know, I call this the news every day. And it's nothing we haven't talked about. I mean, the writing's been on the wall. Oil edged higher, clawing back from a run of losses after a government report, and I'm doing air quotes here, government report, showing that U.S. crude inventories fell to the lowest since February. West Texas Intermediate topped $77 a barrel after falling 5.5% since last Wednesday when we got inventories. U.S. oil inventory shrank by 3.74 million barrels last week. That was the fourth straight decline. price gains were limited as traders also eyed declines in the equity markets. Now, real estate, I know we've talked a lot about that here this morning. One of the least affordable U.S. housing markets in decades is freezing residential real estate sales and shutting out a generation of aspiring homeowners. But one group remains unfazed by the crisis: the wealthy, the aristocrats, the plutocrats. I don't know if you caught that article I wrote the other day on that topic. It is in the Telegram Breeze channel if you'd like to read it. Overall, it's been a troubling key selling season in the U.S. New home sales were down slightly in June and well below expectations after May's 15% decline, while transactions for previously owned properties dropped for a fourth straight month. The lone bright spot in the market is luxury. We're talking about homes worth over $1 million. The only price category to see sales rise in June, according to the National Association of Realtors. It's not hard to understand why. With the 30-year fixed mortgage rate hovering just below 6.9%, after sitting around 3% from late 2019 to early 2022, anyone who has to borrow is paying a significantly steeper price for the same house than they would have just a couple of years ago. But deep-pocketed buyers don't have that concern because they can just use cash. A luxury real estate broker in Florida said, "I can't remember the last time I heard a buyer talk about financing. They all come in with cash." The result is a high-end real estate boom that's sending the stock market's biggest U.S. luxury home builder to new heights. Toll Brothers Incorporated posted stronger than expected orders in its fiscal second quarter. The company's shares are trading near a record high after a roughly 170% rise since the start of 2023, making them the fifth biggest gainer in the S&P Midcap 400 index over time, and making the company the best performing publicly traded U.S. builder in the past 6 months. Historically, higher priced homes are the first to feel the hit when interest rates rise. But we aren't seeing that today. High home equity and the strong stock market have acted as a buffer against interest rates for wealthier Americans. I mean, let's face it, when a Jeff Bezos or a Mark Zuckerberg or an Elon Musk want to go buy a house, they really don't care what the interest rate is. Sometimes they don't even care what the price is because they're coming in all cash. However, that leaves the rest of us behind on mortgage payments, struggling to buy a house, and maybe Googling the address of the nearest homeless shelter. And our last piece of news today: a wave of mega mergers among oil producers is forcing the U.S. service companies that drill and hydraulically fracture wells to slash their prices, merge, or risk bankruptcy as they compete for a dwindling number of customers. U.S. oil producers, also known as operators, announced more than $275 billion in deals over the past year and a half, including multi-billion-dollar combinations such as ExxonMobil and Pioneer Natural Resources. As big producers integrate and become more efficient while raising oil output, there is less work for the oilfield services companies that depend on them, according to a service company executive and energy analyst. Diamondback Energy, for example, anticipates $550 million in annual cost synergies following its acquisition of Endeavor Energy. Of that, $325 million in savings are tied to operations, $150 million to land, and $75 million to financial and corporate cost. The U.S. rig count fell to 586 last week, off 83 from the same time last year, its lowest since December 2021, according to services company Baker Hughes. So that's all the news that's fit to read. So let's jump into the markets and see what's going on. Now, you know what? This was the recap I got at 8 a.m. Okay? Valerie just sent me a brand new recap. So please give me a moment to grab it and post it, if you don't mind. It'll just take me a second. Her screen resolution is different than mine, so when she sends it over, it looks all wacky on my screen. Everybody else says it looks just fine on their screen. So, I don't know what the problem is, nor am I going to worry about it. I'm just going to square it away. So I can share it with you. Fair enough? Fair enough. Here we go. Sorry for the delay. All right, we are in week 312. Over the last 312 weeks, we have issued over 17,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of those alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, since the market opened Sunday night at 6 p.m. Eastern through 12:15 p.m. today, we've issued a total of 69 alerts. It's been a busy week. 9 never triggered. However, I want to point out that those that never triggered remain valid opportunities until they do trigger, whether it's a day, a week, a month, or a year. We're still waiting on the outcome of 19. We've had 41 actionable alerts, of which 8 or 12% would have been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session and vice versa. Now, the purpose of the alerts is not for you to just trade the alerts so you don't have to learn how to trade. The purpose of the logic alerts is to help you learn how to read a chart. Now, with each logic alert, again, as I said, there's over 17,200. Every one of those has an entry price, an initial target, often a second, third, fourth, even fifth target, and then a final trade to target. The purpose of the logic alerts is, of course you can trade them, but use them as they're intended to help you learn how to read the chart. When you started school, you had to learn to read before the teacher could really teach you anything else, whether she was writing on the chalkboard or handing you a textbook. You had to be able to read the thing. What so many traders don't understand is that in that same way, you have to learn how to read a chart. But charts don't use words and sentences and paragraphs. They use candles and indicators. And there's a thing called price action or price flow. And you have to learn to be able to look at any chart of any market and instantly know what the next high probability move is. That's the goal and purpose of the Logic 247 alerts. Until you learn how to read the chart, nobody can teach you how to trade. Now, yes, you can copy other people's trades, but I'm going to tell you something. If your goal is to trade for a living, that is never going to happen as long as you're dependent upon somebody else to tell you when to get in and when to get out. You got to be able to look at that chart and read it like a newspaper or a good mystery novel. Only then can someone teach you how to trade. It's a two-step process. First, you learn to read, and you learn to trade. Now, once you've mastered the Logic 247 alerts, you should be able to spot the entries, the targets, etc. on your own. The CTAs provide you with an opportunity to see if you got it or not. Whereas the logic alerts come out anytime around the clock as opportunity presents, CTAs are published as a static report shortly after the Globex open each evening. We're in the Wednesday session, but the Wednesday session began last night at 6 p.m. Eastern. 5 minutes after the open, all of our members and all of our trial members had every one of these targets. And before the end of today's broadcast, you and I are going to walk through each and every one of these markets and see exactly what happened. Now, the first thing you do when this report comes out is you make a note on your 30-minute chart where price is at the time the report is published. It's always going to be between these two numbers. Now, you only need to do this on the 30-minute chart of the markets you actually trade. If you want to do it on the others so that you can get more practice, so that you learn to read the chart sooner than later, well, there's nothing wrong with that. Once you make a note where price was at the time the report was released, then draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, that means it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. And based upon where price is in relation to the 30-minute BBC, That's where you start using everything you learned with the Logic 247 alerts. Now, the BBC is the green line you'll see on all my charts. Stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now, that's always relative to whatever time frame you apply it to. Daily, weekly, monthly, 30-minute, 5-minute tick chart, range chart. The concept is the same. However, for the purpose of the alerts, both Logic and Concierge, it's always the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, don't fix it. Now, this is where you start looking left to see if you really learned how to read the chart with the Logic 247 alerts. And you learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to reach the weekly zone above. If price is below the 30-minute BBC, it's trying to reach the weekly zone below. We published the zones since December 14th of 2009. This December will mark 15 years. They're published for our members and trial members every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. Just resist the urge to make it more complicated than what I've explained. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Michael will be here in a few minutes, so we're going to go ahead and take a look at the daily chart. It's pretty clear which way the wind is blowing, right? Now, institutional traders, because of their account size and the size they trade in, they're the ones who actually move price. So no matter what you trade, if you'll learn to spend 2 minutes with the daily chart of whatever you trade, futures, stocks, crypto, Forex, ETFs, what you're doing is you're literally looking over the shoulder of the deep pockets who move price. So when you see which way they're moving price, all you've got to do is drop to your smaller time frame and do what the deep pockets are doing long enough to get your goal for the day, and then have the discipline to put the mouse away. Now, I mentioned it this morning in the live training room. I also published it in the passport holders discussion group in Telegram, that we should expect support right where we're at. I called it 34.97 because the number's 34.96 and change. It is the low of July 2nd. Now, look at this low, look at this low, and look at this low. Make sense? I hope so. Now, got red and falling overhead. We're below the BBC. We anticipate lower prices. We have traded through the 24% fib retracement. Now, I'm telling you, institutional buyers are going to hit the pause button. Once we get below this first fib extension right here. Extensions are different than retracements. It's the same 14th century math, just applied in a different manner. Price drops below this line right here, okay? Institutional buyers are going to hit pause on the buy side because they know price is going to drop to the 38. Now, when it hits the 38, we should get a decent bounce. Look what happened when we hit the 24. We got a real nice bounce up to the 38% fib extension. But rejection at that level told us to look for lower prices. Of course, as we discussed yesterday, we had to take out this low from July 19th first before we could make it down to this area. Now, if this area doesn't give us a bounce, we could potentially see the 38 today, if not today, tonight. But at this point, I'm still anticipating a bounce, okay? But as you can see, the bounce we got off the 24 was pretty short-lived, lasted a couple days, and then we took out the 24 today. So the next major stop is the 38% fib retracement at 54.53. The one I really have my eyes on is down at the 50% fib retracement, 53.70. And then we have the 62% fib retracement. And the low of May 31st. It was from this low to this high to this low that we were able to create these fib extensions. When you become a member, I will teach you how to put them on your chart as well. Now you're going to see that I only use fibs, retracements, extensions on the daily chart. When you put them on smaller time frames, it gets a little bit noisy. Now, doesn't mean the same principle doesn't work on a 30-minute chart, for example. But again, I'm only going to the daily chart to gather information. I want to know where major resistance is. I want to know where major support is. And you can't see this on your range chart. And in many cases, you can't see it on your 30-minute chart, depending upon how many days we're talking. So, again, if you trade stocks, futures, crypto, Forex, ETFs, if you'll train yourself to make 2 minutes with the daily chart part of your routine each day before you drop to the smaller time frame to begin trading, I believe you will see your results improve over time. So let's go to the ES. Now, it's rare to see gaps in the indices, except on Sunday night after the market's been closed for a day and a half, or in earnings season. And as I wrote in the discussion group last night, earnings season is on like Donkey Kong. We got this huge gap lower open. Now, typically with futures, gaps will fill within a few hours, or at least in the same session. If this gap fills the day, I don't know, I'll eat my hat or something on live radio. Okay? All right. So we had a gap lower open. We're below the BBC. We got red and falling. So what do we expect? Lower prices. We came down to the target, the short target, and the weekly trading zone. Now, only 3 things happen at a weekly zone. I explained earlier. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. You see how this 30-minute candle sliced through the zone like it wasn't even there? The zone is 55.69/55.70. Now, these are the zones that all of our members got Monday morning at 6:15 a.m. Eastern. And again, they're carved in stone for the entire week. So we sliced through this zone. Remember, that only happens about 10% of the time. But when the slice runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Now, I'm going to tell you what happened here is a lot of algorithmic trading kicked in. You may not know this, but 70% of the trades on the New York Stock Exchange, futures are traded on the CME primarily, but on the New York Stock Exchange, 60+% of all trades placed are done by a computer. No human involved. So when those algorithmic trades start to kick in, you get this kind of movement. Michael's here, so we've only touched on the ES. We've still got all these other markets to cover, and we will when I come back. But right now, Michael's going to give us a recap of everything that happened this morning in the live training room. Then we'll do 30 minutes of live trading on the TradingView platform. And when I come back, we'll finish the recap of the alerts, and we'll wrap things up with our good word for the day. Michael, if you are ready. Michael, I cannot hear you. Oh boy. Never a good thing when that happens. Now, my mic shows that I am generating audio. Guys, some of you in the room, we need you to communicate. I could hear Michael when he first came on. All right, Michael, I don't know if it's my internet connection or yours. Perhaps it's mine. They say that they can hear me, but not you. Is there something you can switch around or grab another headset, perhaps? We can hear you moving paper in the background, but we can't hear your voice.
Headset. It's working.
All right, guys, just hang tight, and Michael will get things squared away here shortly. We hear you typing. We hear you fumbling with your microphone.
There we go. Okay.
All
Now
right.
we got it.
All right.
All right.
Okay. So are you ready?
I am ready now.
All right, buddy.
That was difficult. Okay.
Okay.
Sorry about that.
No
All right.
problem.
So let me bring it over here. I know how frustrating that can be.
Oh,
you
yeah.
know how frustrating.
Oh, I know. Gosh, I know. Yeah.
All right. Let me get my name in here, and we'll just start right here.
Your charts look good, so I'm going to hit mute.
Okay. Here we go then.
But I'll still be here.
Okay. Well, I'll go to 1:30 as usual. I'll try to get it right this time. All right. Good afternoon, everyone. Today is Wednesday. Today is Wednesday, the 24th day. Finally, the 24th day of July. I've been waiting for this. I was working on my boat. 24th day of July. Now, if you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button. When you click on that purple button, you will be sent to. Do I have a registration page? I don't. Yeah, I did right here. You're sent to this registration page, where all that we ask for is your name, your email, and your phone number. There are 5 multiple choice questions. Down here at the bottom, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you have both, give us both, and we'll get your indicators indicating for you. All right. You want to do that at the beginning of your trial, if possible. Now, in the spreadsheet today, if you are going to read the spreadsheet, hey, we got $605 2 days in a row. That is just weird. That is just weird. Yesterday was 126 minus 5. Today was 371, 22, and 10. That is just weird. It's happened before, but it's just strange to see such an odd number. Exactly the same like that. Anyway, yesterday it took 12 trades to get it. Today it took 20. So I had a couple more stop outs today, I'm guessing. Anyway, we made 3 ticks on the NQ, 71 ticks on the Russell, 22 ticks on the YM, and 10 ticks on the ES. Now, Jill, I don't know if you're watching, but I did go back and fix that one trade there on the ES that you had me check on. I thought I had 12 ticks, but I got slipped 2 ticks on one trade. FBI directory reveals new details on how Trump, something, blah, blah, blah. Anyway, so I ended up with $605 again, was what the total was in the morning session. Today it took 9 minutes and 3 trades to get to the goal for the day. At that point, we had exactly the goal. We're at $1,900, and we took a total of 20 trades. So on the month now, we're at $8,107. Over 16 trading days, averaging $506. That is with one contract. One contract. All right. On the year, we're at $55,192. That's over 136 trading days, averaging $405. Again, with one contract per trading day. So in the 24/20 blueprint, if you were to add one contract per month, if you were to add, let's make sure that it's on. Yeah, it is. If you were to add one contract per month and quit trading when you get the goal for the day, so far this year, you would have only had to work about 46 hours, and you would have you'd be averaging right now $1,585 an hour. Starting in January of this year, adding one contract per month, you'd be at 7 contracts now. Did in January of last year, like me, you would now be a 19th contract. And guys, in a week from now will be the last day of this month. So we'll be in the 20 contract position next Thursday. We had to hit 38,000 this month to get there, but we're trading 19 contracts now. Put 19 on here. We're trading 19 contracts now. And we are now at $879,362. We should hit that 7-figure mark by the end of next month. That said, we're averaging $6,687 per hour so far this year for the 46 hours roughly that I had to work getting the goal for the day. $6,687 an hour. That's where you want to be, just consistently profitable, getting your goal day after day after day after day. It doesn't have to be a big goal. A nice, small, easy to get $100 contract goal day after day after day, and you got to keep doing it. All right, keep doing it, and it builds up. This is 7 months in, starting with one contract. 7 months in, averaging $1,585 an hour. All right. I don't want to go into that too much because I get into the trades and I'm starting a little bit late. So if you have not taken a free trial with us, again, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. This is for the YouTube guys who might just be tuning in. No credit card required for the trial, and that's going to bring you to this registration page. All we ask for is your name, your email, your phone number, 5 multiple choice questions, and if you have Ninja, give us your Ninja ID. If you have TradingView, give us your TradingView ID, and that is it. That's all you have to do to take the free trial. So the trades that we did something on every market today. The YM, let's get into that one, and I want to look at the big picture for a minute afterward. When we get done going through the trades that we did do. On the YM, I'm just going to do it this way on the YM because we may end up with a lot of bars here. Drag it little by little like that. Here we go. All right, so on the YM, our first trade was right in here on the YM. We picked up 10 ticks on the first trade, and then there were a lot of black arrows going down through here, guys. A lot of black arrows. Now, you see this. This is something that's coming in the future. It's going to give you complete confidence in those black arrows that have a decent pullback. It should give you complete confidence in those black arrows that have a decent pullback. Okay. Anyway, as we keep going forward here, I picked up just a couple of ticks on this, got me up to 12. Then I had a break even. Then I had 10 more over here to get me to 22. And going sideways here. Now, we didn't end up with any of these blue arrows in here. I did get into the plan, and I when I started the lesson plan, I talked right through the end of the session. So there was another blue arrow here, another blue arrow here. This gets into the break right here. There's a blue arrow there. That's the first one that would have stopped out. Right, and that brings us to current. Currently, we're just going sideways. We don't have anything going on. Right, now the Russell, I did have the Russell looking like the ES when I started out the day, but one of the guys in the trial was wondering why it was like that. So I put it back to normal today. But it was part of the lesson plan. Yeah, it was a big part of the lesson plan today. So, and we did pretty well on the Russell. We ended at the high of the day. We did get to 71 twice. That's where we ended, but we stopped out at one point on it while we're at 71. At the high of the day, we stopped out. Now, I believe the Russell is where we did get the goal for the day. We had some really great leg lengths right at the beginning, and that was a big part of the lesson plan this morning. I did record that lesson plan, so if you guys want to copy that, you just let me know. The first one we had right here, I got a break even on. This one right here is where we got the goal for the day. I picked up 20 ticks on that, I believe. I did pick up 20 ticks on that, and that's where we got the goal for the day. As we continue moving sideways, hang on, I want to go over here really quick and do something with this, and this, and that, and okay, that just messed everything up. This, and this, and hang on. Just a second. I will be need to go once again in a moment. All right, so this one over here we picked up 20 ticks on, and then we get over here, we stopped out minus 10, that put us down to 10. Then we picked up 9 more ticks on this one right here. Okay, we picked up 9 more ticks on this one right here. And then after we picked up a bunch of ticks on this one, I think we got like 27 ticks on that. 25 ticks we got on that, right? Maybe more than that. We're from 19 to 54. So it was a bunch. I don't know how I ended up with a whole bunch on that. I did move the target out, that's what it was. So it was like 35 ticks we picked up on that. To get us up to 54. I moved the target out. We got down toward the 30 tick target, and then some. All right, then we had something else in here. We went from 54 to 71. So we had a 15 tick trade. I don't look like highlighted, but then I stopped out on this one. Remember Mark asking how I stopped out on this one. The 54 up to 71 was the high of the day. This is one I stopped out on. It did go enough to get the stop to break even, but my fill was not very good, and so it stopped me out right here. And then the next trade we took was right here. I got 10 more ticks to put me back at 71. And that was where we ended it with the Russell this morning, it looks like. There were some nice blue arrows through here, all through here. Blue arrows, blue arrows, blue arrows, blue arrows, blue arrows. We had a break even trade here. I guess I did trade a little bit more right at the end. And then we get into the break. Nice blue arrow there. Nice blue arrow there. Nice blue arrow there. You only need one of those to get the goal for the day. All right, and you can see there were 3 of them right there at the end of the day that worked out really well. If you only do one trade, just do the blue arrows. Okay, and if it happens to coincide with this, then that's a really good thing. You guys don't have access to that yet, but that will be a thing for passport people when I'm finished testing it. All right, that was the Russell. On the ES, we had a couple of nice trades on the ES, and it was one today. It was one trade today that I took. This one right here, I think. I thought I got 12 ticks profit. It looked like I got 12 ticks profit on the DOM, but it actually slipped me 2 ticks, and I didn't get the full 12. But on the ES, we started out with 2 ticks somewhere. I guess this was it right here. Started out with 2 ticks on the first one. We had a whole bunch of break-even trades. 3 of them. 3 break-even trades. And then we started out with a 2 tick trade right there that got us to 2. And then an 8 tick trade here that got us to 10. All right. I thought it was a 10 tick trade that got us to 12. That's what I thought it was. A 10 tick trade that got us to 12, not a 12 tick that got us to whatever. It ended up being an 8 tick trade that got us to 10. And I think that's where we ended it on the ES today. We ended it on the ES. There really wasn't a lot left here. Now, the one thing that I want to know about the ES is we switched from a 4 to a 7 range in the middle of the session this morning. I did have it on a 4 range, so we're working off the 4 range with some purple arrows and blue arrows. And some of those break-even trades were probably coming from the 4 range. But thank Jack for correcting me when I was calling out the wrong numbers. I was calling them out for an 8 tick and for a 7 tick range. And there should have been 5 ticks and not 8 ticks from the higher low of the bar. And I was actually placing the orders accordingly for a 7 tick range. And I still got filled, and that's why it didn't look right when I actually did get filled. All right, this is the NQ. Now we didn't have the most trades on the NQ, we had the most trades on the Russell, but we'll get into the NQ right here. Scroll all the way back to the very beginning. We're almost back there now. All right, here we are. Back there. Now, let's crunch it up so you can see it a little bit better. And so we started out right here at the open with the purple arrow. I didn't do it with that. I didn't do anything with the NQ for a while. I was busy with the Russell, really, for most of the first part of the morning. See, we're 15 minutes in right now, right here. We did have news come out here at 9:45 this morning. I don't remember exactly how it was, but we'll go look at that in a minute. So I didn't trade until all the way up here. Our first trade on the NQ was a big +1. And I might not have even gotten that +1. I might have gotten slippage. The next one was a +12. It goes to +13. And then right here, I stopped out. -20. That got me to -7. And then I didn't do anything. I didn't do the purple arrows. I didn't do anything until over here. I stopped out again. That got me to -27. Then right here, I got this short for 30 ticks, and that put me to +3. And I think that is where I ended it. We started the lesson plan, and there are some more blue arrows in there, but and green and blue. There's a nice one. There's both of those were good enough to take and get some profit on. These are 15 tick range bars. You could have 8 to 12 ticks of profit on each one of those, maybe 20. A lot of purples there that worked out really well. And this is right at the beginning of the break, a nice blue arrow there, blue arrow here that would have stopped out. Another one that would have stopped out. You could have gotten it all right back right there. Well, if you stopped out on those two, it would have been -40, and this would have been a +30. So you'd still be a -10 on those 3 trades together. That would have been a break even for me. And still sliding forward, that would have stopped me out. That would have been a break even. That would have been a break even, and I wouldn't have taken that because it didn't put in a higher swing. That would have gotten us some profit and profit. And that's current. Wow. Okay, so there's a lot of stuff in there today. There's a ton of volatility, and there's one of the things that I said I was going to show you was, let me bring it up here. It might have logged me off. Nope, it didn't. Okay, one of the things I said I was going to show you was this. Now, this is the Russell. I wanted to show it to you on the ES. This gap right here. With futures, those gaps normally get filled right away. All right, that gap did not get filled right away. I actually went long from down here. Right, I had a reason to go long from down here, and I went long from down here, and it went like 30 or 40 ticks into profit. And it's something like that, 20 to 30 ticks, something like that, into profit. And I did it from a smaller time frame. That wasn't on 30 minutes. And I was fully expecting it to get up here. I didn't notice it was right at the weekly trading zone. The gap was right at the weekly trading zone. So it had many things to bring it up there. The midpoint between the zones was right here. So I was really expecting this thing to go. I think I drew it last night. Let me look out here and see if I have it out here in Telegram. I think I made a picture of that last night. At some point, this is the ES, right? So yeah, this was it right here. No, this is the NQ. Sorry, that's the NQ. This is the ES. Yeah, this is the ES. So this is what I was looking at last night. From right here is where I got long, and I was expecting it to go all the way up there, but it went way into profit, and I was really expecting it to go all the way up to there, but it didn't. It turned around and came back down. Yeah, that was what I was looking at last night. I was anticipating this move. That was right in here. I don't know what time frame that was on. What time frame was that on? That was an ES30 range. No, that was an NQ30 range. Sorry. This one. it was an ES7 range, right? So I'd show it to you, but I'd have to scroll all the way back there, so I won't do that. But yeah, it was right in here somewhere that I got long, and it went up quite a ways from there, but I was fully expecting it to fill that gap, and it didn't. And so now that it's decided it's going to go down, we have to take a look at what it's done to see what it should do now. Okay, what it should do. So based upon what it's done so far, looking at the bigger picture, I didn't get a chance to do this at all this morning, and I really wished I would have taken the time to do this, but we'll start out with today's action. Okay, today's action is right there. So working with just today's action, we'll go from the bottom to the top. It's the same place. It brings you right back here to this weekly trading zone and to the BBC right now. That's what should happen with the ES. It should pull back up into this area right here. At some point today, it should pull back up into this area right here. All right, if this candle, it's 116. If this candle closes above the weekly trading zone, you see how the black step line is crossing in, and right there it's crossing the BBC. If this candle closes above the weekly trading zone right here, that's important. In 14 minutes, now we'll see it at the bottom of the hour, but if it closes above the weekly trading zone right here, it should go right up here. And the next hour, 2 hours, it should go right up here, and you should find it should find resistance right here and possibly push back down. This unfilled gap here is craziness with futures. Okay, I'm gonna make this a big ugly thing because we got to come back to that, and I want to know it when we do. All right, I'm gonna make it uglier than that. Transparency. Let's make the transparency 50%. There it is. All right, it's got to come back and fill that gap at some point. Futures always do. When it starts this move up right here, it wouldn't shock me. The way this is coming together, this could be a shoulder, this could be the head, and it could build another shoulder right on top of this. If you look left on this whole gap right here, if you go all the way over here, this is the beginning of a shoulder, an upside down shoulder, an inverted head and shoulder pattern. And it wouldn't surprise me if it does the same thing. It gets up here, finds some resistance, consolidates sideways for a little bit, and then makes the run up above this level. And this is going to happen at some point. It's going to get up above this level right here. But this gap fill, well, that's going to happen too. All right. That's just what it looks like to me, the way it's coming together right now. All right. So now I'm just going to trade what's in front of me. I can't, and now I get all this stuff up. I can't even see my DOMs right now. Hang on. Let me get my DOMs back in play here. Here we are. Got all my DOMs again. Now, the very first trade that I took this morning was on the ES, but I logged off and logged back on. My DOMs are actually set to 1 contract, so I didn't even count that one. I got 4 ticks profit on the very first trade, and I didn't count that toward the total at all. Yes, and so right now, when it comes here and it hits the ribbon, we're going to look for a long trade. Now, where was that zone? The midpoint is right here. Right, that does not look like the same zone. If the midpoint is right there, then that other weekly trading zone should be nearby. That doesn't look like the right zone. I know I put the first zones on this morning, so these should be the right weekly trading zones right now. Either way, we're oversold right now. If we get an up close right now, we're not off the ribbon, and we need to actually bounce off the ribbon here. Okay, we never did get a short trade. You could take this without bouncing off the ribbon. I'll give you a black arrow if it pulls onto the oversold right now. I'll give you a black arrow. And that's actually a black arrow that's not too bad right there. It should have given you a black arrow, but it's actually a black arrow that's not too bad right there. Did I shut those off this morning? I know I was messing around with a bunch of the arrows this morning. Yeah, the black arrows are shut off. There it is right there. Okay, I know I shut those off this morning, but here it is. That should put the black arrows on for you. Did I save that? Did I not save that? Anyway, I took the trade here. I took the trade. And we're going to hit break even on the stop and lock in a couple of ticks on that. It should go. I just saw a number a second ago. I'm going to lock in 4 ticks on this. The number that I like, I think it's going to pull back before it gets to it, but 55 0925 is what I like. 550925. It's going to take me out here at break even, and not break even to plus 1 point. Why did the black arrows not show up there? I did turn them on. You should be seeing them right here. This pull out of the oversold. Let me pump to a 1 minute and back to a 7 range. I don't know what's going on with that. This one. There it is. What the heck? What was wrong with that guy? Anyway. You should have gotten the black arrow there. And we did. Over here now on the Russell, we want that to pull back up and test the ribbon. Pull back up and test the ribbon. Right. In a trading zone. Is that what's going on? It's a weekly trading zone right here, Jill? Because my zones aren't right, apparently. I told you I had to reset them this morning, and I thought I did reset them this morning, but I might not have done it on that context. Let's just take off all the ones I'm not using. And Jill says we're right in the middle of a weekly trading zone, so let me go and get my weekly trading zones, and we'll fix that right now. Thank you, Jill. All right, here you go. We'll copy, select the text, and slide it over. Come in here and click that and hit this, and I don't have weekly trading zones on this one. Let's try that. Paste, add a digit, remove a digit, create the midpoint, say okay. There it is, right in the weekly trading zone. You are right. Are you in the right contract, Jill? You said none of your DOMs are working beside the ES. And call Bert. 866-928-3310. Yeah, you're on the U contract. I see that. I see that. I don't know. You can call Bert. He's the one who might be able to help you out with that. I'm sorry to just push you off like that, but I really don't know. My DOMs are all working right now. They have been working all day. I did get some slippage, not as bad as you got that one time. And that one trade that you were talking about, where you got 6 ticks with one contract. 6 ticks of slip with one contract. That's unbelievable. I would not trade live like that. You should go back to demo until it gets straightened out. Okay. All right, what time is it? It's 1:23 already. Dang, where did the time go? I guess it took me a few minutes to get going today, didn't it? All right, so far I've only taken the one ES trade right here, this black arrow, and I didn't realize it was going right into a weekly trading zone. I definitely wouldn't have taken that. I am looking for we're not going to have anything right here, and something is coming in my Telegram. Are you sending me something in Telegram, Joe? I don't think so. Okay. Not you either. Okay. I'll figure it all out in a few minutes. All right, on the NQ now, we changed directions, and we're looking for it to go back up and test the ribbon right here. Okay. All right, so right there on the NQ, that is actually a ribbon trade right there. Now you don't have an arrow because it didn't come out of the overbought, but it did hit the ribbon and give you a down close. Now if you wait for it, you might end up missing it here. Okay, and here it is. I didn't wait for it. But now that I took it, if it does pull back and give me a blue arrow, I can't take it. All right, a blue or a green arrow. But I did have an opportunity to take some pretty good profit there a second ago, and I think I'm going to get it again. I think it's going to give me all 30 ticks right here. Nope, it didn't. Came back. And did you see on that one? I don't know if you noticed, Jill, you've been watching this closely today. I don't know if you noticed on that one. I got slippage on my fill, so my target wasn't in the right place on that one. I don't know if you noticed that. Yeah, I don't know what's going on, Jill. I don't know if that's isolated to you. Because I'm not having that kind of a problem. I'm getting a little bit of slippage, but nothing abnormal like that. Okay. So this green arrow here, I had to put in a lower swing. It did not. Right? I can't take the green arrow because actually I can't take that green. I did take it. But I can't take anything else in that direction until it puts in a lower swing. Right? Over here, this green arrow needs to put in a lower swing as well. This green arrow needs to put in a higher swing. This purple arrow doesn't really need to put in a lower swing, but it is a ribbon trade over here on a YM. See it over here. The purple arrow, what that means is the long and short-term direction are both in favor of a short trade right here. All right, you got a pullback that bounced off the ribbon where both the long and short-term direction stayed short. So if you get that, when the ribbon is spread, if you get one of those that pulls up to the ribbon, when the ribbon is spread and the long and short-term direction is still in favor of the trade, those usually work out really well. As you can see, that one is. Did put in a lower swing. I didn't get it, but it did put in a lower swing. Let me make that clearer to you, okay? The whole thing behind the purple arrow is to identify for you when you have a pullback where all the momentum is still going down and you have just a quick pullback that actually bounces off something. It bounces off an area that has some area of resistance in this case, to push it right back in the same direction. That was the whole idea behind the purple arrow. So you could see everything was going in that direction and you had an opportunity to enter in that direction. It was like, Dwayne sometimes will say, the flow of the river is always, you always want to jump in with the flow of the river. And in this case, the flow of the river was going down. It had one little tiny eddy right here for just a minute, and you can jump in right there and then just go right back into the flow of the river. That is what the purple arrows are there for, to identify those for you. And those of you guys that were in the lesson plan this morning, the leg lengths we were doing this morning, here's our leg length right there. As we break out of the junk, here's our leg length right here. That's what you should expect. Okay. Yes. All right. What time is it? It's 1:28. I only have like a minute left. I don't know if we're going to get another trade set up in here, guys. But what I do know is that if you go out here to mytradingiq.com and you click on this purple button right here, it will bring you to this registration page where you sign up for your free trial. And when you sign up for the free trial, all we ask for is your first name, your last name, your email, and your phone number. Now, first name and last name would be nice if you give us that for real. The phone number, that too. The email address, you definitely got to give us that. If you give us a bogus email address, you're not going to get anything. You'll never communicate with us. The drop downs, you got to fill out something in those drop downs. Fill them out honestly. They're pretty easy, yes or no questions for the most part. All right, they're not complicated questions. Just fill them out honestly. If you fill these out wrong, if you say you are a partner here, you're not going to get emails. All right. If you say you are not a partner, then you get the emails with the invite to the room. If you say you are a partner, you won't get that email with the invite to the room.
And there's a crazy little thing called IP addresses.
Yes.
So don't track those. So don't get cute. I mean, it's just embarrassing for everyone.
It is. It is, and there's no sense in it. You have no gain. And down here, if you have NinjaTrader, give us your machine ID, and you have TradingView, give us your machine ID for that, and your login ID for that. All right, I changed it to username because it said username at some point, but now it's back to login ID. Give us your login ID in there, all right? And we'll be able to enable the indicators for you. So you get your indicators indicating at the beginning of your trial. Get everything put on your charts. Look at that leg length I drew over here. What to expect out of a trade, all right? That was from today's lesson plan. What to expect out of a trade. And look, the targets were all in there too. I don't know where the last, oh, these are long targets. The last arrow must have been a blue one. The last blue arrow must have been up. Actually, last blue arrow must have been a long blue arrow. That's why the targets were all bullish. Anyway, that's it. For that, I'm going to pass it back out to Pat. This Phoenix, Arizona is Studio A, overlooking South Mountain America's largest city park. Dwayne, you are ready.
Yep. Okay, recap of the morning session.
Today it took 9 minutes and 3 trades to get to $1,900.
Good job.
Thank you. Thank you.
All right, guys, we'll pick up where we left off. Price consolidating at the weekly trading zone, 5506/5507. Again, these are the zones published Monday morning, 6:15 a.m. Eastern. Closing in on 15 years. December 14th of this year will make 15 years that we've published the zones for our traders on a weekly basis. They come out Monday morning, 6:15 a.m. Eastern. Once they're published, carved in stone, the entire. Already covered the ES for those of you that arrived late perhaps. The CTAs are published as a static report shortly after the Globex open each evening. Last night I got them out 5 minutes after the Globex session began. So all of our members had all of these targets. 5 minutes after the open. Now, obviously, we never had any reason to be concerned with the long target on the ES because price never got above the BBC, the 30-minute chart. We had a gap lower open, which is not filled and won't fill today. Short of an act of God. Now this gap lower open here. Now the vertical line separates today Wednesday, Tuesday, Monday, Friday. This is the CrowdStrike. That's not a gap lower thing there. That's the CrowdStrike data issue there. But this is a true gap lower open. It's rare to see gaps in futures because futures trade around the clock. We do see them on Sunday night because there's pent-up energy because futures markets have been closed for a day and a half. They open Sunday night at 6 p.m. Eastern. So occasionally we see gaps Sunday night. And the only other time you'll see gaps in the futures market, because they trade around the clock, is in earnings season. And we are now in earnings season. Okay. We had a number of big names report after the bell yesterday, and some reported before the bell this morning. And as a result, well, what you're seeing here on this gap are the ones that reported. And when I say after the bell, I don't mean the futures bell. Stocks stop trading at 4 p.m. Eastern. Futures continue to trade to 5 p.m. Eastern. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, slice. Price slices through a zone on a 30-minute chart like it's not even there. When it runs out of steam, it will 9 times out of 10 retrace back to the zone it sliced through and then continue in the direction of the slice. So you had a leg and a retracement and a leg and a retracement and a leg and a retracement and then a huge leg. Now, we may have seen the low of the session. Why do I say that? See how the step line on this huge move down, you got price, black step line, red and falling, and the BBC. That's what I call the perfect stack. What's changed is the step line is in the process because the market is consolidating at the zone. The step line is crossing to the right side of red and falling. What does that tell us? Price is going to attempt to retrace back to the BBC. Normally on most days, I would say there was an incredibly high probability of that happening. But this is the first sign of any real buying pressure that we've seen since the major decline began. And again, let me show you. This morning, Michael, I guess you're gone already, but this morning I popped into the live training room and I also posted this in the discussion group, the Telegram discussion group for passport holders. I said, expect 54.97 to be support and to potentially give us a bounce. That's exactly what it did. Not because I have some magical powers, not because I have crystal balls, but because I've learned over the years how to read price action, how to read a chart. When you become a passport holder, I will teach you the same thing. On to the Dow. Gap lower opened last night below the BBC. We're only thinking short, and price goes right down to the short target, and as you can see, it's the zone of the tick. Whenever the market finds support, it's gonna go look for resistance. Pull back to the BBC holds more often than it doesn't. So resistance is now going to send the market looking for support. Which it found. This zone is 4160/4165. Okay, so we didn't quite make it all the way to the zone, but you'll notice sideways consolidation, step line crossed, price at this point, because there isn't such a great distance as there is on the ES, it's a very high probability that price will retrace to the BBC. Again, the pullback holds more often than not. But you have to embrace all possibilities. You expect it to hold. You find where you're going to trade. It does hold. And honestly, all of these little jagged edges here, I really have no interest in trading this area here on the Dow. The only thing that would get me interested in the Dow is if this retracement to the BBC doesn't hold and we get up into this area here, about 44.45, actually 44.70 to 4,500. It's 30 points. You only need 20 points to get your goal for the day. Now, this is Wednesday, Tuesday, Monday. The Dow was wild last week. This week, flat, flat. But the Dow fell in sympathy with the other markets today. The Russell. Here's where we opened last night. This is the opening candle. 5 minutes into the life of this candle, all of our members and trial members had their targets. Now, When price hit the BBC, what do we expect? Expect it to hold. It holds more often than it doesn't. And so, support is going to send the market looking for resistance, which it found. The close of the gap. That resistance then sends us looking for support. Okay? Now this support is an overshoot of that low. It's just like a tick or two overshoot. In other words, you would expect support there based on market structure. Support sends us to resistance, sends us to support, sends us to resistance, sends us to support, it sends us to resistance, sends us to support, it sends us all the way up to resistance, back down to support, and this was some jagged trading here. You should have had your goal for the day long before any of this. Okay. So did we hit the long target? Yes. Short target once, twice, 3 times, 4 times. You only need 2 points to get your goal for the day. I mean, this is like overkill. The point is to show you what's possible. Okay. Thin Q. Gap lower open, below the BBC. Reason to ever think about longs. We hit the zone, and what do? 70% of the time, consolidate. Then we finally drop through. We get a leg and a retracement. A leg and a retracement. And we're at the short target. Consolidate at the short target for hours. And then the drop begins. We come down to the zone, to the tick. Now the zone is 19604/605. I just put the one line because I used to put both lines, but I'm a minimalist when it comes to charts. For me, less is more. So we hit it to the tick, bounced up into resistance at red and falling, and in one candle, took us all the way to the next zone. Now, from zone to zone, this is 604, this is basically 500. I mean, 500 is above it, so I'm being very conservative. 600 is below the zone. This one candle right here. Now, I'm not even counting this part up here. I'm just counting this part between the zones. It's 100 points at $20 a point. That's $2,000 per contract traded. If you've earned the right to trade 10 contracts, that's 20 grand. When you become a member, you don't start trading 10 contracts. You don't start trading live. You first have to learn to read the chart. Then you have to learn our strategy, which enables you to learn how to trade. As a new member, you'll get the 24/20 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. You're going to start out trading in your demo account. You want to put together 10 consecutive days in a row where you reach your goal, 10 trades or less, before you even think about going live. In fact, once you've put together those 10 consecutive days, the 24/20 blueprint will give you the green light to go live with one contract. Now that you're trading live, real money. Your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Now, there's a huge difference between the first and second contract. The first contract is funded with your startup capital, but the second contract is funded with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the self-discipline to follow the blueprint, if you have the self-discipline to follow the blueprint, the chance of you blowing up yet another account becomes extremely small. In fact, you're going to have to break some rules to blow up another account. Not saying it can't be done, but you're not following the blueprint. The blueprint is also going to assist you in writing your business plan and your trading plan. Every successful business in America, whether it's a hot dog cart outside a baseball park or a mega corporation, they have one thing in common. They have actually two things in common. One is a business plan. The hot dog vendor, he's got to have a business plan. He also has to have an operational manual. Okay, when he goes to Sam's Club or Costco each week, based on his previous sales, how many buns does he have to buy? How many dogs does he have to buy? How many of those huge jars of mustard that he's going to put in those little squeeze bottles? How much ketchup? So I know some people go, ketchup on a hot dog? Well, depends what part of the country you come from. I'm from the South, put ketchup on everything. Anyway, it's all in the blueprint. You see, you got to do the work. This is not going to happen like magic. There's no get rich quick overnight. You're going to have to put in the work. If you want the reward, you're going to have to do the work. You're going to have to show up. You're going to have to ask the questions. You're going to have to follow the instructions. And you just might become the 1 out of 10 who succeeds. Now, out in the world, 9 out of 10 new traders fail. Inside the walls of CFRN, it's a very different statistic. Why? Because inside the walls of CFRN, we actually teach our members how to trade. Teach them how to read, then we teach them how to trade. And we give them 24-hour-a-day, around-the-clock support via Telegram. We also give you 2 hours of live training every day in the live training room. And you have access to one-on-one personal mentoring at no additional charge when you become a member. Step lines crossed, consolidating. Now, still got another zone down here. Remember, today's only Wednesday. Potential for this to retrace to the zone, and by the time it gets to the zone, the BBC will have probably dropped to the zone. That would be resistance times 2. Remember, when price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. Okay? So as this step line crosses, now that's a counter trend trade. And the Logic 247 channel, there's over 17,200 alerts, but every one of them is a trend trade. There's not a single counter trend trade in there. Now, there's nothing wrong inherently with counter trend trading. It's not illegal, immoral, or fattening. However, you do not have the same high probability, low risk characteristics with a counter trend trade as you do with a trend trade. Would you prefer to swim upstream or downstream? We're going to teach you to go with the flow, okay? Again, that one candle, not the whole candle. Be much more with the whole candle. I'm just talking about the part where it went zone to zone. It's $2,000 per contract traded. How much does it cost to trade one NQ contract? I think it's up to, with DT Pro, it's up, I don't trade the NQ personally, but the S&P is 750, Dow 750. I think the NQ might be 850, 950. Now, that's how much money you got to have in your account to trade one contract. But you're using a hard stop. I forget how many ticks Michael uses with the NQ, but you're not risking the whole bunch. Well, I mean, stops can get jumped in a fast-moving market. That is possible, okay? Doesn't happen a lot, but it can. Don't expect it to, but know that it can, okay? So when you get stopped out, you're going to get stopped out for the 10 ticks or the 15 ticks, whatever it is that he's using and training you each morning in the live training room with. The rest of that money that you put up to trade that one contract, it's going to go right back into your account. All right. I'm getting deep in the weeds here. Crude. Here's where we opened. Price just waddled sideways until it got itself into a position where blue and climbing was directly above it. And price got below the BBC. So what do we expect? More prices. Now this one candle right here opened 77.34 and it dropped 190 bucks per contract traded. Support sends the market to resistance. Pullback holds more often than not, especially in the presence of red and falling. So from support to resistance, back to support, back to resistance at the bearish cross, back to support, leg and a retracement, hit the zone, resistance. Resistance will send the market looking for support. Where to find it? At the zone. Support sends the market to resistance. Where to find resistance? At the zone. What did it do at the zone? Consolidated. Now we spiked it. We spiked the zone and almost touched. What did we get up to? 78.19. So we missed the target by, I guess, 6 pennies. Okay. You see this bearish cross over here? Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance. And it has been. Now, Price is sitting right on top of the BBC. Either it's going to hold or not. If it doesn't hold, $77.40, $77.20, $200 per contract traded. If you've earned the right to trade 10 contracts, it's a $2,000 window of opportunity. But remember, if you're going to become a part of CFRN, you're going to start in your demo account. Now, this is for your safety. When you become a member, you've already paid us. So, what does it matter to us if you blow up another account? It means a lot to us, because we actually care about people who become members. We're one big happy family, and we treat each other with dignity, respect. Hard to find in the world of trading, but it's here in abundance. Now, this window is only valid if the pullback doesn't hold. It held here for a bounce, and it finally gave way. Gold. We opened right here, right at a weekly zone. Now, the zone represents what? Resistance. So resistance is going to send the market where? Looking for support. Support's going to send the market looking for resistance. To support, resistance. We're looking for support. Price has gotten back below BBC. We've got red and falling overhead. Now, as this candle drops, when it hits this low right here, you're going to probably see it retrace back to the zone it sliced through, and then continue in the direction of the slice and take you down to these lows from yesterday. Plan your work ahead of time. You don't make these decisions in the heat of the moment when you've got bullets whizzing past your head. Plan your work, and then you wait for the trade to come to you. Just explained where the short trade is. What if the market suddenly reversed for God knows what reason? Oh, speaking of, I don't know if you guys have seen the news article yet today. Probably be unfair of me not to show it to you. NASA is headed to a golden asteroid worth $10,000 quadrillion this fall. Now, for those of you that have been around CFRN for a long time, I've been telling you, and Elon Musk has been telling you, that a lot of these asteroids out there have precious metal deposits. Remember, God created the heavens and the earth. Now, in past years, it wasn't possible for us to land on a asteroid traveling at thousands of miles an hour and mine it. But technology is learning how to do it. So think about it. If your safe haven, flight to quality has always been goal, it's time to start thinking like James down here. He goes, I'm selling gold. I mean, they just found 10,000 quadrillion dollars worth of gold. Will they be able to successfully mine it? Well, we don't know the answer until it's done. And the punchline was, guess how much Bitcoin they found? None. All right. Looking for gold to drop. $24.02 to $24.01. Your goal for the day. $24.07, $24.06. Goal for the day. And then if we were to drop through the short target and trade it down to that right there. I keep telling you I'm going to teach you about that someday. But anyway, silver. Here's where we opened last night. Dropped to the BBC. The pullback held. Support sends the market to resistance. Resistance sends the market to support. Back to resistance, back to support. Back to resistance, back to support, back to resistance, back to support. Over and over again and again. It's a never-ending cycle until price trades through the BBC. Even though it holds more often than not, we know eventually it's going to trade through. And when it does, what's it looking for? Support. Once it finds support, what's it going to do? It's going to look for resistance. In this case, that means potentially a retracement back up to the BBC. Euro. I just don't know what to say about the euro. I mean, we've had a mighty fall, and now we've been attempting a retracement to the BBC all morning, and it's not happening. So activity in the euro slows down. It's time. Wait a minute. This euro chart isn't even printing, is it? It's not even printing. There we go. Okay. So this is where we opened last night. Price ran up and hit the BBC resistance. What do we get? We got a leg down to support that was defined yesterday. Support sent us to resistance. Resistance sent us to support. Sent us back to resistance. And now what are we looking for? Traded through the BBC. We're looking for support. There's your first stop. There's your second stop. And that's it. We've covered it all. And price is still sitting on top of that support number I gave all of our members and trial members this morning in the live training room, and that I published in both the passport holder discussion group and the trial discussion group. Go there, look at it, see the timestamp. Okay, I wouldn't pull your leg about something as important as that. And again, has nothing to do with magic or crystal balls. It has to do with being able to read price. Want to learn how to read price? Become a member. How do you do that? Go to mytradingiq.com. If there's not a buy button on the home page, call 949-42 Emini. Hopefully Valerie will answer. If you catch voicemail, just say, hey, this is so-and-so, this is my phone number, I'd like to become a member. She'll get back with you. Or you can email support@cfrn.net, and in the subject line, just say, I want to become a member. Either Valerie or someone will reply to your email and provide you with a link so that you can get signed up, become a member, and begin the process. When you become a passport holder, you're going to get 2 hours of live training every trading day in live markets in real time with real money. 9 out of 10 new traders fail because they don't have a teacher. So the most important thing we could do for you is to give you a teacher. As I said earlier, I can't guarantee you'll become the 1 out of 10, because even though we're going to give you all the information you need and all the tools you need, what you're going to do with that information and those tools, that's out of our hands. Are you going to learn to develop the patience and discipline necessary to be a consistently profitable trader? That's between you and God. Along with 2 hours of live training every day, private one-on-one mentoring. No extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same. You'll also get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You'll be able to attend the members only workshop on Thursday night, and you'll get the golden key that opens the private channels in Telegram, which means you can go back and watch all the previous workshops we've archived in that particular channel if you want to. Do you need to? Well, no. It's nice to know you have that incredible resource at your fingertips. But what you really need to do is simply show up to the workshop tomorrow night, if you're a member, because it's a members only workshop, and ask questions. When you're brand new, sometimes you don't know what question to ask. Then you get to the point where you kind of think you know what question to ask, but you think everybody's going to think you're stupid because it's a stupid question. You know the old saying, the only stupid question is the one you don't ask, okay? You're in a family-friendly environment. We're all on the same team. If you're new, everybody else is rooting for you. We want to help you. All of our traders want to help you. The only way we can help you is if you ask questions. If you sit there stoic and silent, we can only assume that you already got it figured out. Open up. You're among friends. It's a safe space. I can't believe I even said that. All right, let's go to our good word for the day. Get the heck out of here. We started yesterday, theory or truth, part 1. I bet you can guess what we're going to talk about today, part 2. John 2:19. Jesus answered them, "Destroy this temple." He was referring to his body. You do know that your body is the temple of the Holy Spirit, right? Okay. Jesus said, "Destroy this temple, and I will raise it again in 3 days." Let's examine another theory put forth by those who try to disprove the truth of Christ's bodily resurrection, called the swoon theory. In his book, The Passover Plot, Hugh Schoenfield theorizes that Jesus simply swooned, was taken down from the cross, and was thought to be dead. Then, in the coolness of the tomb, he revived, came out, and convinced his disciples that he had actually risen from the dead. It raises some interesting questions. For example, how come for 1800 years prior to this theory, neither friends nor foes of Christianity ever mentioned it? And what about the Roman centurion who pierced Christ's side with a spear, and blood and water came out? Empirical evidence that life ceased because the blood had separated into its constituent elements. And what about the testimony of the centurion sent by Pilate, a man who dealt and trafficked in death, whose business it was as an executioner to know that Jesus was dead? Then there's the question of the grave clothes. Jews customarily wrapped dead bodies in grave clothes and used dozens of kilograms of spices between the folds, sealing the garments around the corpse like a mummy. The head was also wrapped. So if he had only swooned, how could he have breathed? And how could a man in such a weakened condition remove the great boulder that sealed his tomb and overcome the Roman guards that were guarding it? Let me tell you this, friend. It takes more faith to believe in the swoon theory than it does to believe the truth of what really happened. Christ is risen. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.